Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome to the Treasury Update podcast. I'm your host today. My name is Craig Jeffrey. I'm the managing partner of Strategic Treasurer. This is part of a series on Treasury roles and development. This is the third section. When we think about Treasury roles, operational effectiveness and strategic excellence are two key pillars of what occurs in Treasury Group. And this short series on the Treasury Update podcast explores different types of roles within Treasury. Some responsibilities are by nature highly operational, necessary and important for Treasury to fulfill its mission, and other responsibilities are more strategic in nature and require foresight and excellence in planning and relationship management. While each position tends to be oriented heavily in one direction, there are positions that are hybrid. What can we learn about these different activities and roles in order to be more effective in our careers, working with others, and more helpful to our organization? What assumptions should we challenge? How do we leverage our strengths and develop some of our weaknesses? This is part 3 in our series on Treasury roles and is titled Treasury Roles, Mastering the Operational. Today we're discussing the operational roles of Treasury, and I am joined in the series by Paul Galloway. Paul is a senior advisor with Strategic Treasurer. Welcome back to the series, Paul.
Thanks, Craig. Good to be back. This is going to be a good topic today. Looking forward to the discussion.
I'm assuming people know your background, that they have listened to at least one other session in the series. And if you haven't done that and you're listening, feel free to jump on and download the others and listen to them. But Paul, maybe we begin with a quick overview of the most common operational roles and activities in Treasury, and we can go back and forth, or you can list them. I'll start with cash positioning and cash forecasting are two very core roles in Treasury. Most of those they tend to be heavily operational. Forecasting can sometimes be a little more expanded on. Payment management is another one that tends to be on the operational side of the ledger. Paul, maybe you could help fill out the rest of the major roles here.
Yes, Craig, some of the other roles that we typically see on the operational side include bank account management, fee and relationship management, and in particular, relationships with banks is a key component of the operational function. A treasury unit and treasurers maintain those relationships on a regular basis. The other is liquidity management, short-term investments, capital management, which when you think about the relationship side with banks, liquidity management and capital management are important components of that relationship. And the last is risk management. How do you manage the risks associated with moving cash around or keeping outside parties from making someone within the organization make a transfer that is not legitimate transfer of funds and that the company could potentially lose or have a financial loss associated with that. You know, Craig, when you think about this long list, I mean, there's a lot of operational roles and so you've got to have a very diverse background as a treasurer or somebody that's a leader of a treasury unit to effectively manage all of these. You know, when you think about these, is there one or two of these that we listed that stick out as ones that are, you know, key to being effective on the operational side of things?
When something stands out as a key operational activity, if we look at the functions here that you and I had talked about, you know, cash positioning certainly is a key operational area. So is payment management. These are items that require a certain level of care and detail. You know, you don't want to be overdrawing accounts at certain banks or across banks or in certain countries or jurisdictions. That gets extremely costly and cause failed trades. So there's a level of care that's required to support that. Certainly on payment security and payment management, making sure items are accurate, that the controls are put in place. Those are, I would say, extraordinarily important to be done with care and accuracy. There's usually time pressures with them. And bank account management, often falls into that operational area. If that's answering the question that you had on those, I did have something to say on the risk management, capital management side too.
One of the areas that sticks out as a component that's rising in terms of importance, it is forecasting. I've seen it with our current clients. I've seen it with organizations that I've worked for in the past, and forecasting is becoming more and more important. And so there's becoming more of a integration of treasury with FP&A and the company budget to ensure that forecasting is more accurate. And then it's tying to what expectations are of the management team and the business units within an organization. So I see forecasting rising in its level of importance, which kind of means that basically everything we've listed is really important stuff. And I'd like to hear more about your comments on capital management and risk management, which, I would agree these are components that deserve some attention.
As we look at this spectrum from operational to strategic, risk management and capital management have components, in terms of design that tend to be more strategic, in terms of execution, daily, weekly, or monthly management tend towards the more operational side of things. So you mentioned risk management. What are all the elements of risk management? Determining, what business you're in, of course, is, part of your overall risk management activity. But there's also this concept of what's our risk capacity? What's the most we could bear to lose or have an impact, down to what's the risk appetite? What kind of volatility are we willing to suffer from without paying to eliminate, some of the natural swings of cash flow or income that occurs? To me, those are very strategic oriented decisions, as well as what are your strategies and plans for, putting financial instruments in place or exiting businesses or taking on businesses that reduce risks more systematically. That seems to be much more strategic. But then there's also the side of risk management in terms of, hey, we're doing FX, trades, whether they're spot transactions to settle something immediately, or whether they're forwards or futures for, some date in the future, an amount certain to handle, let's say in the case of an FX situation, to transfer funds from one currency to another to settle some exposure, to make some payment. And that tends to be more, you're following the strategy. There's care in executing that and a need to comply with it. But that tends to be, it follows the strategy. And so I think of the risk management itself as a bit of a hybrid. There's a key strategic element, and then the operational area has to be well tuned to that to make sure that they're doing it effectively. Because you can break, and I'll give you an example. Let's say you have a financial instrument, you have a floating bond in your investment portfolio. You have some liability on the other side that's fixed. And so you put a financial instrument in place to change your floating asset to fixed to match your liability. If you go ahead and sell the asset, you sell the investment or the bond, or whatever the example was that I gave, and you left the financial instrument there, now it became a speculative hedge in this case. It no longer matched and did what you wanted. You can write your strategy documents and plans, but if operationally there's not a discipline to make sure, the underlying exposure and the financial instrument that matched up with that didn't get transacted on at the same time, you broke what you're trying to do. And you can't succeed with great strategy without great operational, compliance, effectiveness, and understanding.
What do you think is needed for success? Is it accuracy, speed? Is it a mindset? If it's a mindset, what kind of mindset is necessary for somebody in these kinds of roles?
Accuracy and speed coupled together are almost always needed in an operational way. There has to be a certain level of care, but you can't drag things out forever. If you're really slow in putting your cash position or forecast together, you have excess money to invest, you're getting lower quality, you're making lower quality investments. It tends to have lower yields on what you're investing in. And that's a bit of a trade-off. You usually think of, do you want it good or do you want it fast? Well, we don't want to make it so it's one or the other. We want both of those to be the case. And so those are some of the skill sets. But to the core of your question about the mindset, I think there's a couple things. One is really a contextual understanding. Whatever the operational function is, that whoever's doing that understands the broader picture and the reasoning behind the strategy, so that if there's any type of variance or anomaly, that they can call it forward to bring other resources to bear or to make some type of decision or call for help to address that. And so I think that mindset is not just, I just want speed, I just want accuracy, or I just want speed and accuracy. I want all those things to fit in with what we're trying to do. So that contextual understanding is crucial. If you don't have both of those, you're far less functional and valuable to your organization. If you don't have all those coupled together, the mindset with his ability to move quickly, make decisions promptly according to a predetermined plan. I know when you think of the military, you think of the OODA loop, the ability to reorient, make decisions quickly and do that rapidly. That's really, really crucial on the operational side. Your thoughts on that, Paul?
Yeah, Craig, some of the other factors that come into play in terms of broadening out from there would be a key one that I found being in these roles is the ability to be flexible. By nature, I'm an Excel jockey. I love using Excel. I gravitated towards being reliant on systems doing things for me that I could have done in Excel. If I have the opportunity to do something in Excel, I do that. However, what I've learned over the years is that the ability to be flexible is key. There's a strong need for someone that's detail-oriented, someone that wants to dive into the data and information. Because the reality is that treasurers and treasury units are dealing with thousands and thousands of transactions a day. They have to be able to understand that, what's going on. When something breaks down, why did it break down? Where did it break down at? They've got to do research, and have the ability to do that requires somebody that can be detail oriented. Apply that into what they're doing to find what the cause is, where they need to go to make the adjustment to fix the issue. The flip side is like our forecasting discussion earlier. Being able to be detail oriented here will help you improve your forecasting abilities. Even though there are systems that will help with that, artificial intelligence or machine learning, I still feel that the ability to dive into the detail will help people understand what the AI and the ML are telling them. This is another important factor or mindset that people need to have.
What's the artificial intelligence and machine learning telling them? Right? There's a level of familiarity with the details, but also the broader context. That's really helpful. Paul, as we think through, what was needed for success, what else do we need to know about the role and skills for the operationally excellent treasury groups or people in an organization?
People have to, when they come into these roles, they have to understand they're wearing many hats on the operational side. So it's very common that the list that we had up above, a treasurer, assistant treasurer, somebody that's heading up a treasury unit, is covering all those facets. You got to respect the roles. You may be keen to one or the other. It's more comfortable to you, and so you can gravitate towards that. You got to respect what's going on in the other roles. Some of the other things would be transitioning from one role into another. And you may have to transition multiple times throughout the day from one role to another and back to a role you were in earlier to get all the operational aspects completed. The other thing that I think is important is coverage. It's the day-to-day vitality of the operational side of treasury. It's making sure that you're able to have a team that is in place that can do the things that you need them to do to cover the various areas as you shift from one to another. Because as a treasurer, you're not spending all your time on everything all at once. You're moving from one thing to the other. Probably, one of the most important things, if I'm wearing the hat as a treasurer or somebody that's heading up a treasury unit, is fraud and exposures. When the watchers aren't watching, that's when somebody's going to get hit. And certainly one of the things in my prior roles, prior life, that would keep me up at night is thinking about, have I done all I can to ensure that we are exposed? There isn't potential fraud. Do I have the right systems and controls in place? You work on that so that you can sleep at night. I like to call it sleep insurance. I don't have to worry about these things because I've dotted the I's, crossed the T's, and I've reduced my risk to a level that's acceptable to the organization. So fraud and exposures, I think, is something that's really, you got to keep an eye on it.
Yeah, one of the areas that criminals, they seek to exploit organizations, learn about them, and they wait for the opportune time to pounce or to trigger their actions. And they're waiting for when the watchers are asleep or out. And a lot of the defenses are heavily people-centered because the operationally excellent people can spot something that's a variance if an AI tool isn't in place or isn't watching. They can spot something anomalous and know that it's wrong immediately, or know that something's wrong and it requires more care. And so I think that's another thing we need to know about the roles and skills. We don't want to be overly dependent on people, though they are extremely skillful and able to manage that. But that also puts us at risk when it's, people will wait until the good watchers are not there and you're looking at a backup watcher. And I don't know why we're using the term watcher, but you know what I mean? Someone who's looking and monitoring accounts, activities, the cash position, they're doing their treasury proof to make sure things are right. They have that ability to spot things. The other element here where I think there's a lot of risks in organizations is and you spoke to some of this, is when can you take a break? When you're in a strategic role, there might be some deals that are going on or something that's a crunch time, but there's also other times where you don't have hourly, daily, or even weekly deadlines. And so when someone's on holiday, they're off for a week or 2 weeks. There's not necessarily a major impact if something occurs, but sometimes there's an over-reliance on a particular person or a few people. And if someone's out that's in that group, those people are checking in, or they make sure they're available by phone to answer questions on essentially a daily basis. And some of them get no break. That's a problem. I mean, I'll just say, we've had, in this era of the Great Resignation, significant amounts of hiring and expansion where people are getting hired away from other organizations, where we've had to use our staffing function to staff different roles, primarily where you have a person who's burned out. People have left. They're covering multiple roles. There's not enough of a bench to cover the daily activities for cash positioning, forecasting, approving activity. We've seen that grow quite significantly over the last few years. And so, when we say we see that as an exposure, we see it in multiple data points. Now, this is not from a survey, but just from seeing that pop up again and again. And to me, I think that's also, people need to think about, how do I make sure people can actually take a time off, take a vacation, go away for the holidays for a few weeks without having to dial in every day. People also get sick. They move positions. That needs to be factored in as well. I don't think we as leaders in treasury in many organizations are factoring that in properly, particularly where there's, 10 or less treasury people in an organization.
What is the opportunity or threat here for automation? What are the things that you see that could either be an opportunity or a threat associated with automation of processes, systems, things that people are doing that are manual? It's surprisingly, there are a lot of organizations out there that are still doing things that they did 20 years ago. These kinds of things expose them to risks that they're starting to recognize today. And so when we think about these kinds of organizations that are in these positions, what's the opportunity and what's the threat?
The opportunity and the threat, are two sides to the same coin. Seeing what's happened over multiple decades in treasury groups, in accounting areas, in other parts of organizations, Treasury's always been fairly thinly staffed, but Treasury has a significant operational bent and focus in addition to the strategic, and there's people that are in roles that are very operational. So there's a couple of things that I think are a threat or an issue. One is they get very comfortable doing things a certain way. Why change it if it's not broken is the motto. That's not a very good motto. It should be, we need to continue to improve the level of automation, our efficiency, our ability to scale, and how we do that should be prioritized based on the level of impact and this gradual move towards better processes. It doesn't have to be, we have to break everything all the time, but everything should be moving you towards a more automated route. But that idea of if it isn't broken, we don't need to fix it, we don't need to change it or mess with it, can lead people to doing things in a very backward way that are 10, 15, 20 years old. That's very inefficient for the organization, more fraught with risk and exposure than is necessary. And that presents an undue risk, not on any given day-to-day level, but over weeks, months, and years. That creates a problem. That's one issue. From a career perspective, that's also a problem. If you're very efficient, at gathering data, moving around, doing lots of manual transactions, you may love the endorphins of doing that, of having these deadlines and having this sense of how excellent you are at getting those activities done. And it is really a great skill, but that needs to be automated. And if you don't work on automating those items and improving them, those will be automated. If you're just resisting that, you will eventually be chased out of the job and you'll have to find another job that has a lot of manual tasks to do that. And you will be continually chased by bots and different automation activities across the organization or to other areas, to other companies. And that's not a good long-term game plan for your careers. That's one of them. And, some of the skills that make you really successful in operational roles, being able to handle lots of items, analyze them quickly, make good decisions with those, can also be part of the downfall. I think that's a risk as well. Like you talked about being an Excel jockey. You can do all kinds of things. Like you can create massive Excel files that, pull in files, parse them, do error checking, creates export activities. Like, this is fantastic. Well, you create a dependency on a person, you trap yourself in a role, and ultimately you're not optimizing what goes on. You're creating something that's acceptable and bought you some time, but you didn't build something that's industrial strength, or you didn't allow the organization to build something that's more aligned with what a corporation should do. And that's a risk, because you made things significantly better than they were, and then you stopped and you rested on those, or you thought that's all that there is. I've seen the issue and I've solved it. And I think the biggest issue and the biggest mindset here is, whatever we're doing, we need to look and see what can be done better over time operationally. We need to understand that it's not going to be the final end state. And we can talk about everything from connections to formats to how we do forecasting to variance analysis, error checking, scenario planning. There is a constant set of changes that will occur over your career. And you can be early adopter, you can follow fairly quickly, but if you drag your feet, that will roll over you, and that will be the risk. And it's a disservice to the organization.
I have a great example of an organization I worked for. This organization, it's good company, good leaders, but they got trapped, Craig, in the sense that they built their own homegrown treasury platform. They have real smart IT unit that built this platform for him. This was some time ago. At the time, it worked well for him. However, people in the IT unit started, taking on different roles or were going to different organizations. And pretty soon it got to the point where they didn't have folks there to support the homegrown platform. And it was starting to break. And there wasn't a manual anywhere that said, hey, here's how you fix it. Here's what you do. So put them in a pickle. So they band-aided the thing for a period of time before they sought out, more relevant technology that you see today. They're not the only organization that's been there or have gone through this. It's just an example of, you don't want to get your organization pigeonholed into something where, you can't adapt to improve, that continuous improvement that you talked about earlier. And that's what happened to them. They got trapped. They had a hard time getting themselves out of it. It took them some time to make a transition. Lots of companies are in that position today, which is challenging. Obviously automation brings about lots of efficiencies, but the points that you made, it allows you to do the continual improvements and it allows you to change in your roles. The ability to do that, I think, is really important. I like your analogy to, somebody that's going to lead the change or is going to be a quick adopter. Those are the folks that are going to win. You need to win in this area. If you don't, it's going to come back to bite you. I think organizations are figuring that out based on what I've been seeing over the last, 5-10 years. I think organizations are realizing the value of their treasury unit, the value they bring to the table, not just operationally, but strategically, and how they're becoming more of an aligner for the future of the business. So I really like what I'm seeing out there. As you think about everything we've covered quite a bit. Are there other things that you want to bring up in, closing this session down?
Well, I think I'll emphasize a couple things and maybe give another example. So the contextual understanding for the treasury professional who's has more of an operational role, making sure you understand the context of the business, the cash flows of an organization, where technology is going. That is crucial. Even though you might be a person who can handle putting out 3 to 20 fires a day and can do it as calmly as anyone, that needs to be coupled with this longer term view of what's changing and how do I help bring the organization along. Even though I'm very busy moment by moment, how do I help that organization move forward, both conceptually, but also practically, putting in new technology, making different decisions, understanding the structure that goes on. And how do I stay current? You still must stay current on different topics, even if it's just to know what goes on. But there's certainly a lot of cases where you should understand what's happening with technology, with the different risks and volatility that comes at us from, macroeconomic positions, geopolitical machinations that are going on, underlying economic, challenges brought about by fiscal policy or monetary policy. There has to be some context for that, not just be a response person. I only respond to certain stimuli. I'm thinking about those. I can respond well and quickly and make good decisions, but I'm also thinking about how this is changing over time. That has to be part of the brain of the operational leader in any treasury group, Paul. Any final thoughts from your side?
This series overall, I think it's been a good message across the board to talk about these topics. My hope is that the people that have the opportunity to listen to the series, and if you haven't listened to the other two recordings or you've only listened to one of the other two, I do encourage you to listen to the other ones that you haven't heard. There are 3 of them. I just enjoy seeing the direction that organizations are taking treasury today. When we see this bifurcation between operational and strategic, it solidifies the reality that treasurers today are strategic. They're operational and strategic. And it takes a unique person to be able to manage and be successful in these capacities. You have to have, as we talked about mindset. We talked about flexibility, continual improvement, the use of systems, the ability to focus in a fast-paced world and then turn around at another point in time during the day, slow down and focus on something that is more strategic in nature and takes more thought process and takes longer. And these are not easy skills to find in a single person. And so if what we've talked about interests you, I suggest that you listen to all the podcasts, you bone up in the areas where maybe you find some gaps or weaknesses to develop those skills so that you can grow in your current role and expand into some of the other things that Treasury offers.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.